Nice gains on the day, up 33.55 for brand new equity peaks in a contentious market. Mainly taking short trades and had some extra slippage on the hypotheticals. I'm double check that. I'm looking at the 1 minute charts and I traded off the non 1 minute charts. Some of these strategies I've converted to 1 minute charts for the money management algorithms, and I'm looking at those results right now. They look the same. I'll have to go over that and see whether there's that difference. Thought we were closer than that to the hypotheticals today, but we are at equity peaks. Almost 3 minutes ago, we were at these equity peaks on an end-of-day basis, and now we're at those equity peaks once again. And both the hypothetical drawdown is no drawdown. Equity peaks today on both of these on live and hypotheticals. Good week, good month, quarter, and year. About 24% on the year. Show you an automation trick as well to reduce slippage, and we're going to go over the micro trades as well. So discussing the micros also in this setup. So go over the trades first. Cobra 3, 1375 on the day, plus 575 on Viper. Gap continuation minus 725, Robot minus 425, and AT 2022 minus 725, EVP-1 minus 700. EVP-1 long only minus 400. Tick pulse down on the day minus 625. Tick count trend down minus 1875. And tick reversal plus 2455. Momentum reversal and tick reversal were the trades on the day. $3,500 on momentum reversal. Mag 7 also captured the short side. 975 OPV, 2 short trades, 1595. Bounce reversal minus 1225. And so highlights on the day were certainly the short trades that you saw right in here. Let me get the pen out. Let's look at this. And the short trades right in here were definitely the highlight of the day. OPV, Mag 7, momentum reversal, tick reversal. These long trades in here were all small losers. We cut our losses, and they were small relative to the gains on the short side. So let's look at the S&P setup. By the way, the Nasdaq strategies were only 6 for 14. So we had a lot of really active day, a lot more activity than normal, and just a lot of back and forth. It was kind of a divergent. Run the highs, run the lows, run the highs, run the lows. Thought it was going to reverse again, but it didn't. So the Nasdaq strategies were 6 for 14. We had 8 losers and 6 winners, and still nice gains on the day. The S&P strategies were 2 for 4, not as active as the Nasdaq. And you see tick pulse here down on the day, minus 625. Tick wave, minus 825. And the opening chops were profitable, plus 775, and then plus 600 on opening chop 2. And let's look at the micro strategies. I want to go over the automation trick first, then we'll go to the micro strategies. Automation trick, at the very end of the day, we had 2 strategies that were long, EVP-1 long only, and momentum reversal. They all exited at the same time. So what I did was I turned off automation for EVP-1 long only. I turned off automation for momentum reversal. Since this one at 10 after 4 o'clock, this one would sell one at the market and this one would buy one at the market. So we were net long 1, and at the close, if we kept automation on, there would be 2 sells and 1 buy at the market at 16:10 to exit. And so what I did instead is I turned automation off for this, turned automation off for that, save a little slippage and commission. You know, it's not going to make a huge difference. But I only had 1 sell at the close instead of, sell 2 and buy 1 to offset a +1 position. So that was as an automation trick you can do if you're going to exit at the same time towards the close of the day. Obviously, had there been a fast move down, this one would have been stopped out, and you'd have to manually adjust if you were out of sync because of a stop loss on a fast market. So we're going to look at the micro strategies now. So looking at the ES, tick pulse minus 6250, minus 8250 on tick wave, plus 775 on opening chop, and plus 60 on opening chop 2. Same as the S&P, or the E-mini S&P and the micro S&P matching plus 137.50 on Cobra 3, Viper plus 57.50, Gap continuation minus 72.50, Robot minus 42.50, AT 2022 minus 72.50, EVP-1 matching was at minus 70 on the day, minus 70, and then EVP-1 long only minus 40, and then tick pulse minus 62.50, and then tick count trend NQ minus 187.50, and then tick reversal plus 245.50, momentum reversal plus 350, mag 7 plus 97.50, plus 155 on OPV, and minus 122.50 on bounce reversal. All the signals are the same. There could be some different slippage numbers on those. We didn't trade those live. We didn't show that in this row because we're not trading it live. We're going to go over the signals so you can see the signals, see if they match the E-minis, and compare it like that. So let's look at the money management algorithm indicator. You can see how this worked out. It was back and forth all day. I love to see the plot of this indicator so you can see the path. It was down. Felt like we were gonna have a losing day. Market rallied and then ran down here. It took out these highs, took out these lows, and let's go take out. There's some more highs. Let's take out those highs. Let's go take out these lows. Very divergent price action on the Nasdaq. Thought it might reverse again at the end of the day. It did not. It's interesting to note, the back and forth nature. We were down, we came back, and then it reversed again. We were down again, then we slowly came back as we built shorts into the close, and that is the indicator. You can also see the net market positions. The S&P was short and then long, and then it was just flat at the end of the day, while the Nasdaq got short down here as much as 3 positions. Didn't take much. Long as much as 4 positions up here. And so the static equity curve, I have not updated that for today. I made another video for that. Here is the signal strength trader, and it was down on the day. It got in on those 4. This is just for the Nasdaq, so just look at the Nasdaq. Got in on those 4 longs, stopped out, and it was down on the day. It's more risk averse. It doesn't take as many trades, and it just takes 1 trade per day, and it has that $1,500 stop loss, $2,400 profit target. And so let's look at the market position trader. The market position trader. So this is more risk averse as well. It has a $3,000 stop loss, and it's done for the day after a $3,000 stop loss. And so here's the equity curve, though. It was down the last 2 days, and on the week, the market position trader is up $1,400. It's being more risk averse. And let's look at the monthly. Last month it was up 10.8, and so you can see those numbers here. The daily losses are smaller, but sometimes you get out early and you miss out on reversal days like today. And so oftentimes when you're more risk averse, your percentage of winning days goes down. This also has a max number of contracts to be 5, while we have, this trades the Nasdaq, so it could trade up to 17 contracts. You still get really good results trading just 5 contracts and using a $3,000 stop loss. But let's see what happens if we remove the stop loss. So here it is, taking all the market positions up to 5 contracts, and you can see the equity curve looks good. The day is up 23.35, performed a little bit less than we did. The annual is up 123. Periodical returns. Let's look at the monthly. And so you can see the monthly, there's a losing month on February, minus 11,000. That's the only one. Let's look at the dailies. So you can see the daily results there. And one more thing I want to look at is the trend component of this market, percentage of time it trends versus the percentage of time it chops. And when you look at the hourly charts, starting at the open on Wednesday, there was about 4 hours where the market trended here. So there's about 4 hours, and then it went through almost 48 hours before it trended again. So you have 48 hours of chop from this point all the way to this point, 48 hours of chop to 44 hours of trend, and then you have another 2 hours of trend. And so very low percentage of trend component in this market right now. There's a lot of propping and fighting to make the market go up, and the fundamentals seem to be increasingly bearish, but the liquidity is still bullish, and so it's going to be interesting to see which one wins out. We're flat at the end of the day and are ready for Monday's trade, always doing research, and we are at equity peaks now, but I'm always doing research, looking to update the strategies and always looking for better ways to trade the markets, regardless of if we're at equity peaks or if we're in a drawdown. Next week there is Apple, or actually next week there is CPI. So the market will be interesting to see what will happen with CPI. It's gone straight down. I would think it would be a little blip up at some point. Nothing goes straight up or down. And some of the commodity markets are higher. Apple was off today pretty significantly from the recent earnings, and so that was also interesting. These are the trades on the day for Friday, August 4th.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.